So we are starting week 23 of this year, and this week, and we're going to look at dollar, GBPUSD, EURUSD, gold, and BTCUSD. So that is the weekly outlook that we are going to look at here. So this is my trading journal. You'll be able to see your trading rules, so you can write down all the trading rules for your strategy, and then you can follow, because you can see here, these are now the trades you've taken, for example, for this trading strategy. So this journal also gives you your analytics, and this analytics is automated as long as you have logged your trades with all the details about that trade. So if you want this trading journal, it's a Notion template. I'm going to leave a link in the description box below. So we're going to start our analysis with the dollar index, and we'll start with the monthly time frame because we're starting a new month. Now, if you look at the monthly time frame, you can clearly see we had all this bearish momentum last year, 2025. Then we had a consolidation, and so far this is where price is. And if we look at this candle, we can clearly see that this bullish move from this high to this low here, the market has created a new dealing range, because you can see we have made a lower low, which is market structure shift in this case. And anytime you're forming a dealing range, it's either the market is making, you're getting a market structure shift, or you're getting a break of structure. That's the best way to get a dealing range. And so once a dealing range is formed, you expect or you anticipate a retracement to a premium of the dealing range or a discount of the dealing range. In this case, because it's a bearish dealing range, we anticipate that if dollar will still continue bearish, we need to see a retracement to a premium of this dealing range. And the premium PDRE of this dealing range, you can see we have this fair value gap right here. Okay, so which means so far what do we have? You can see the market made a low. So we want to see a retracement to this internal range liquidity, which is also the premium of the dealing range, which is also the fair value gap. So which means our bias for dollar is bullish. Now we just need to see that price is lining up bullish. And I want you to see we had this very tiny volume imbalance right here, and you can see it got tagged the month of April, and it also got tagged the month of May. And so far you can see the month of May, it got tagged and rejected, and so far it actually, we have closed bullish. So now going forward, that's a good sign. Because we are bullish on the higher time frame, we're not just going to go on the lower time frame and start buying. What we want to see on the lower time frame is we want to see price aligning also bullish with our higher time frame bias and our higher time frame analysis. So let's see what the lower time frame is doing. So let's look at the weekly time frame. If you can clearly see, it's more clear on the weekly time frame, all that bearish momentum, and then we had all this consolidation here, liquidity sweep, and then again on the weekly time frame, what do we have here? This is market structure shift. You can see the market has made a new higher high, which is a good sign, because remember we said on the higher time frame you're bullish. So we want to see any lower time frame than the monthly lining up bullish, and you can see weekly is already lining up bullish. Then we had what? All this bullish momentum. Price left behind this weekly fair value gap, and we looked at it last week. I told you wanted to see price tag this, and then we continue bullish, and you can clearly see last week that's what happened. Last week price tagged this weekly fair value gap. So what do you want to see? This weekly fair value gap should not be inverted by price. This should act as support and push price higher. So let's look at the daily time frame. You can clearly see on the daily time frame we also had a daily fair value gap, where we also have the weekly fair value gap and price tagged there. So going forward, we want to see a bullish dollar from here. So let's look at USDCHF. So USDCHF and dollar index are positively correlated. So if you want to know what most major pairs are going to do, the first thing that you need to look at is what the dollar index is doing. Then from there, if it's positively correlated, expect it should behave the same as dollar. Those that are negatively correlated should behave opposite as dollar. So that is why USDCHF, I really don't need to go all the way to the monthly time frame and look at everything. We can just look at this weekly time frame, what price is doing. You can see we had that retracement to this volume imbalance, the same as dollar. Then we got all this bullish momentum. Last week you can see we had a retracement to what? To this volume imbalance right here. So this volume imbalance should act as support, and this should be used to push price higher. So that's what we want to see. So let's look at the daily time frame. You can see it's the same thing. Price tag the weekly volume imbalance, and then we have this volume imbalance here on the daily. We actually want to see price invert this, then we see that bullish momentum. So let's look at EURUSD, and we're going to start from the monthly time frame. So EURUSD and dollar index are negatively correlated, so which means you want to see the opposite of dollar. So having all that bearish momentum for dollar 2025, you can see EURUSD was clearly bullish. So again, the same thing, EURUSD, we have what? Price has created a new dealing range. You can see the market did what? We made a new higher high. Actually, this is break of structure, because you can clearly see EURUSD, we had that bullish move. This was a retracement and then a higher high. So at this point, you can say this is a break of structure. Price has created a new higher high. So because we have a new dealing range created by price, we say if you want to continue buying EURUSD, you really don't want to buy at this point here, because buying EURUSD at this point here is really considered expensive. They're using the theory of premium and discount. The best place to buy from if you're buying is from a discount. And our discount array is what? We have this monthly fair value gap right here. So the best place we want to see euro go to is retrace to this fair value gap, which is the monthly fair value gap. So if that is the case, that means what? That means our bias is bearish until price gets to this monthly fair value gap. So let's look at the weekly time frame. Remember, we said if you're bearish EURUSD, we want to see the lower time frame lining up. And on the lower time frame, you can see we had, okay, this is the weekly time frame. I know the weekly time frame is not really a lower time frame, but it is a lower time frame of the monthly time frame, right? If you compare with the monthly, weekly is lower. So now you see we had all this consolidation and then market structure shift at this point right here, or liquidity sweep, market structure shift. So all this bullish momentum, I just consider this as a retracement to premium levels before we continue bearish. And if you look keenly EURUSD, you can see we had this weekly fair value gap here, which got tagged by price this week that just ended. And also price actually inverted this fair value gap. This is a bullish fair value gap that got inverted by price. So if EURUSD, if you're going to see that bearish momentum, which means bullish dollar, then this should be used to push price lower. So let's look at the daily time frame, and you can clearly see last week we identified this fair value gap. We wanted to see price tag this fair value gap, and then we see bearish momentum. And you can clearly see price has tagged this daily fair value gap together with the weekly fair value gap. So still the same thing. We want to see what? We want to see bearish momentum. Already price has tagged it, so we want to see a bearish move from here. So let's look at GBPUSD. So GBPUSD and EURUSD are positively correlated, so we're not really going to look much. We're just going to start with them from the weekly time frame. And you can see again the same thing, market structure shift here, retracement, and we've had this bearish momentum. And you can clearly see also price inverted this bullish fair value gap on the weekly time frame, which is good. That's what we want to see because we are bearish. And then you see there's a weekly fair value gap here, which got tagged by price the week that just ended. Again, that's what we want to see. And this is what we identified also last week. That's what we wanted to see price do, which it has already done. Then now we want to see what? Bearish momentum from this weekly fair value gap right here. So let's look at gold. And for those people who've been watching me for some time, you know very well we analyzed all this bearish momentum, and we were looking at this weekly fair value gap. And this weekly fair value gap, we actually wanted to see if price is going to respect it. This should be used to push price lower, and you can see so far that's what we have. We've been having this bearish move, a retracement, and then now we've had this lower low. So going forward, we still expect more bearish momentum. And this low here is what I'm watching as the high probability drove liquidity for price if you're going to get that bearish gold. So let's look at the daily time frame. And on the daily time frame, you can see the same thing. We had a low, a retracement, a lower low, and then what happened? This is what we identified last week. We wanted to see price tag this, and then we see a bearish momentum. And you can clearly see the week just ended, price did that. You can see price has tagged this daily fair value gap. So we want to see what? Now that bearish momentum. So today, instead of NAS 100, I want us to look at BTCUSD. That's the analysis that I want us to look at. And if we look at BTCUSD, just looking at it even from these 3 months, you're going to start from the 3 months time frame. You can clearly see, of course, BTCUSD has been bullish. Then finally, we had this breakout structure here. So we can say a new dealing range has been created by price from this low to this high here. And you can see on the 3 months, we have this fair value gap right here. So now, if BTCUSD is going to be bearish, we're going to get, and you can see clearly it has started that bearish momentum, which is what we want to see. So the draw of liquidity for price, we would be looking at this fair value gap here on the 3 months time frame, and you can see we also have an order block right here. Okay, so now if we look at it here, can you see this fair value gap, you can see price actually inverted this fair value gap, and then these 3 months that we're currently in, you can see price has tagged it. So we want this to be used actually to push price lower, for us to get a retracement to this for price actually to get to the discount level of this dealing range before price continues bullish if BTCUSD is long-term bullish. So remember, I've told you guys, if you're bearish on the higher time frame, you want to see any lower time frame lower than that higher time frame lining up to that bias. So in this case, because you want to see a bearish BTCUSD to this internal range liquidity, we can see clearly on the monthly time frame what is happening. And on the monthly time frame, you can see we have market structure shift right here. So which means a new dealing range has been created by price. I don't know why this Fibonacci tool is not giving me 50% right, but that's okay. You can see we got a retracement to where? To this fair value gap right here on the monthly time frame. So we can see this monthly fair value gap is the premium PDRA. So if BTCUSD is going to give us that bearish move as we have seen on the higher time frame, then this monthly fair value gap is a very, very beautiful PDRA that should be used to do what? To push price lower. So let's look at the weekly time frame, and you can clearly see what has been happening. We've made a low retracement to this weekly fair value gap, and then the market did what? It made a lower low, which means a new dealing range was formed by price, and then there's that retracement to what? Where we had the monthly fair value gap, we also have what? This weekly fair value gap. Beautifully, you can see price actually retraced, tagged it, and now we have this bearish momentum. So what do you want to see? This is what you want to see. The lower time frame is also lining up bearish as we had identified on the higher time frame. So let's look at the daily time frame. You can clearly see after price tag that higher time frame PDRA, we had all this bearish momentum, inversion fair value gap. You can see price retraced. This inversion fair value gap has been used as a resistance. It has pushed price lower, and again a new lower low has been formed. And in the process of forming the new lower low, you can see price left behind this fair value gap. And we also have this fair value gap right here with this order block here. So what I'm doing, I'm watching both fair value gaps. Either price will use this, even tag the order block and push price lower, or we can get a deeper retracement to this. Although it would be nice actually if price leaves this open as a breakaway gap, then we get that bearish momentum. So for me, it would really be nice if actually price uses this fair value gap here. It can even tag the order block, or maybe wick to this. If it has to, it would be nice if it just wicks to this point, and then we see that bearish momentum. So that is all I prepared for this weekly outlook video. If you enjoy these videos, please don't forget to give it a thumbs up. It's going to really help. And if you have not subscribed, subscribe to this channel. I'll see you in the next one.